Hello and happy Friday. Welcome to another edition of the Friday Interest Rate Update. Well, as we all learned in school, the shortest distance between 2 points is a straight line. Well, that's not happening with inflation. Interest rates were on a roller coaster this week, up and then down and then up again. Both the consumer price index, the CPI, and the producer price index, PPI, came out this week higher than expectations. That's not a good thing for Wall Street. Inflation has pretty much been on a straight line downward trend since it peaked at 9.1% in June of 2022, and it now sits at about 3.1%. The more important core inflation, which the Fed looks at very seriously, sits at 3.9%. The Fed target is 2%. We want to get down to that 2% level. As we get down closer to that 2% level, it gets tougher and tougher to continue that straight line downward from where we were. Thus, we're going to have some hiccups along the way, and Wall Street really doesn't like those hiccups. They want that straight line downward. So whenever there are variations from Wall Street expectations, the markets react negatively. They never want to be caught on the wrong side. That's what happened twice this week with the release of the CPI on Tuesday and the PPI today. Conversely, another big market mover came out this week, and that is retail sales. And this was worse than expected. And is the Christmas hangover I spoke about earlier this year starting to set in? Well, retail sales were down much greater than expected. So that actually improved the market earlier in the week. But combine that with consumers living on credit cards with record debt of over $1.3 trillion in credit cards right now. Is it time for individuals to start pulling everything back? And if so, this will clearly help reduce inflation and mortgage rates will follow, potentially even a recession. The issue is it's going to take more time to see if this trend continues. And once again, I believe there is still uncertainty on Wall Street, and we're going to go sideways for a while, maybe heading into the summer months before we see rates drop. Now, a huge shout out to all the single ladies. So according to homeownership statistics from the Census Bureau, compiled by LendingTree, single ladies own more real estate than single men in 48 out of the 50 states. Keep it going, ladies. And hope you have an amazing weekend, and we'll see you next Friday. Cheers, everybody. Bye-bye.